Would you like to hold an asset that is thought of like gold, or an asset that is fast, transparent, and secured? How about an asset that can either be an investment or a form of payment? Imagine sending money to anyone in the world, instantly, with just a few clicks. No need to wait for bank hours or worry about international transfer fees. That's the promise of Bitcoin. It's a revolutionary way to handle transactions, making the process faster and more efficient. It's a digital currency, which means it exists only online. You won't find physical Bitcoins in your wallet, but you can access them from anywhere in the world. Unlike traditional money, Bitcoin isn't controlled by any bank or government. This makes it decentralized. No single entity has power over it, giving users more control over their own money. It operates on a technology called blockchain, which is like a public ledger that records every transaction. This ledger is transparent and secure, ensuring that every Bitcoin transaction is verified and cannot be altered. Bitcoin allows for secure and transparent transactions. Each transaction is encrypted and recorded, making it nearly impossible for fraud to occur. Anyone can use it, and it offers a new way to think about money and finance. Whether you're in a bustling city or a remote village, as long as you have internet access, you can participate in the Bitcoin economy. It's like digital gold, but instead of storing it in a vault, you keep it safe using technology and a hardware wallet. Digital wallets and advanced encryption methods ensure that your Bitcoin remains secure, giving you peace of mind in the digital age. Over the years, Bitcoin has grown in value and popularity. It's not just a currency, it's an investment and a topic of global discussion. People are mining, trading, and using Bitcoin in innovative ways, shaping the future of finance. More businesses are accepting Bitcoin as a form of payment, from online retailers to local shops. This growing acceptance is paving the way for a more inclusive and accessible financial system. As we move forward, Bitcoin represents a new kind of money that transcends borders and traditional financial systems. It's a glimpse into the future of how we might handle money and transactions in a more connected world. Bitcoin, created in 2009 by an anonymous figure or group known as Satoshi Nakamoto, was developed in response to the 2008 global financial crisis. Its purpose was to create a decentralized peer-to-peer electronic cash system that didn't rely on governments or central banks. Bitcoin introduced a revolutionary way of processing and recording transactions using blockchain technology, a transparent, secure, and immutable ledger that operates across a decentralized network of computers. Bitcoin's early days were marked by skepticism and niche adoption, primarily among tech enthusiasts. The first significant milestone in Bitcoin's history was in 2010, when 10,000 BTC were used to purchase 2 pizzas, now a famous reference point illustrating its value growth. Since then, Bitcoin has evolved into a widely recognized and accepted form of digital currency and investment. In 2017, it reached a significant price peak of nearly $20,000, and in 2021, it surged to an all-time high of $69,000, marking its place as a major asset in global finance. Bitcoin has many advantages over traditional currencies. First, it is decentralized. Bitcoin operates on a decentralized network, meaning no single entity, government or financial institution, controls it. This makes it resistant to censorship or interference. Second, it has a limited supply. Bitcoin's supply is capped at 21 million coins, making it a deflationary asset. This scarcity is key to its value proposition and positions Bitcoin as a hedge against inflation. Third, Bitcoin is globally accessible. Bitcoin can be used by anyone with internet access, making it an inclusive financial tool, particularly for people in regions with restricted or unstable banking systems. Fourth, Bitcoin is transparent. All Bitcoin transactions are recorded on the blockchain, ensuring transparency and traceability, while also reducing the risk of fraud. Fifth, Bitcoin is seen as a store of value. With increasing adoption and its limited supply, Bitcoin is now viewed as a digital gold and a reliable store of value. Lastly, Bitcoin has a potential for high returns. Historically, Bitcoin has delivered significant returns on investment, attracting both retail and institutional investors. While Bitcoin offers many benefits, it also comes with challenges. These challenges can impact its adoption and usability in various ways. One challenge is volatility. Bitcoin is known for its price fluctuations, which can present high risks, especially for short-term investors. Another is Bitcoin's scalability issues. The Bitcoin network can struggle with transaction speeds and higher fees during periods of high demand. Currently, Bitcoin is undergoing regulatory uncertainty. Different governments have varying approaches to Bitcoin, and future regulations could impact its value and utility. Lastly, Bitcoin does pose security risks with exchanges. While Bitcoin itself is highly secure, wallets and exchanges can be vulnerable to hacking, emphasizing the importance of secure storage. Securing your Bitcoin is crucial. In the world of digital currencies, the responsibility of safeguarding your assets falls entirely on you. Unlike traditional banking systems where your money is protected by the bank, Bitcoin requires you to be your own bank. Bitcoin is regarded as one of the most secure cryptocurrencies due to its underlying blockchain technology. Bitcoin transactions are verified by a global network of miners who use a proof-of-work consensus algorithm to validate and secure the blockchain. This decentralized verification process ensures that once a transaction is recorded, it cannot be altered, making the system resistant to fraud and hacking. However, the safety of Bitcoin largely depends on how it is stored. Cold storage, using hardware wallets or other offline storage methods, is considered the safest way to store Bitcoin, as it's not connected to the internet and therefore less vulnerable to hacks. Conversely, hot wallets, online wallets, are more convenient, but carry greater risk due to their internet connectivity. Bitcoin operates through a proof-of-work mining system, where miners solve complex cryptographic puzzles to validate blocks of transactions. The first miner to solve the puzzle is rewarded with newly minted Bitcoins, currently 6.25 BTC per block as of 2024. This process, known as mining, ensures the security of the Bitcoin network and controls the rate at which new Bitcoins are introduced into circulation. Bitcoin's supply is capped at 21 million coins, making it a deflationary asset. Approximately every 4 years, an event called the Bitcoin halving reduces the block reward by half. This halving process helps maintain Bitcoin's scarcity, which has historically led to price increases post-halving. While Bitcoin transactions are pseudo-anonymous, meaning wallet addresses are visible on the blockchain, but the identity of the user is not directly tied to these addresses, transactions are transparent and publicly verifiable. Bitcoin has demonstrated remarkable growth since its inception. Starting at less than a cent in 2010, it reached nearly $20,000 in 2017 and surged to $69,000 in 2021. Despite its volatility, Bitcoin has shown a consistent long-term uptrend, making it one of the best-performing assets over the past decade. Although Bitcoin has gone through several corrections and bear markets, it has repeatedly recovered, with each cycle bringing in new all-time highs. Investors who held Bitcoin over the long term have often reaped substantial rewards. Bitcoin's future potential remains significant. As institutional interest continues to grow, more companies and investors are incorporating Bitcoin into their portfolios. Large corporations like Tesla, MicroStrategy, and Square have made significant Bitcoin purchases, further legitimizing its role as a store of value and hedge against inflation. The development of technologies like the Lightning Network, designed to make Bitcoin transactions faster and cheaper, enhances its potential as a practical currency for everyday use. Moreover, Bitcoin's ability to serve as a hedge against inflation makes it increasingly attractive in regions facing currency devaluation and economic instability. While Bitcoin is still in its early stages of adoption, it's already being used in the real world. Some companies accept Bitcoin as payment for goods and services. You can buy anything from coffee to cars with Bitcoin. Additionally, Bitcoin ATMs are becoming increasingly common, making it easier to buy and sell Bitcoin. Furthermore, Bitcoin has the potential to facilitate cross-border payments, especially in countries with limited access to traditional banking services. Its fast and low-cost transactions make it an attractive alternative to traditional remittance methods. Whether or not to invest in Bitcoin is a personal decision. It's crucial to understand the risks and potential rewards before investing. If you're considering investing, start small and only invest what you can afford to lose. It's also essential to do your research and understand how Bitcoin works. Learn about different wallets, exchanges, and security best practices. Remember that Bitcoin is a volatile asset, and its price can fluctuate significantly. Invest responsibly and be prepared for potential losses, but also potentially high rewards. Here's a basic way to invest in Bitcoin. Choose a trusted exchange. Popular platforms like Coinbase, Binance, and Kraken offer secure and user-friendly interfaces for buying and selling Bitcoin. Use a wallet for security. Store your Bitcoin in a cold wallet, offline wallet, or a hardware wallet for maximum security. Consider dollar cost averaging, DCA. This strategy involves investing small amounts at regular intervals, reducing the impact of market volatility. Hold for the long term. Historically, Bitcoin has rewarded long-term investors, so consider a buy and hold strategy to maximize potential returns. The future of Bitcoin is uncertain, but its potential is undeniable. As technology advances and adoption grows, Bitcoin could become a more integral part of the global financial system. Governments and institutions are exploring ways to regulate and integrate Bitcoin into existing frameworks. While challenges remain, Bitcoin's decentralized and transparent nature has the potential to create a more inclusive and accessible financial system. Whether Bitcoin becomes the future of money remains to be seen, but its impact on the world of finance is undeniable. Despite its volatility, Bitcoin is widely considered one of the safest crypto investments due to its decentralized structure, limited supply, and growing adoption. It has survived multiple market cycles, proving its resilience and longevity in the crypto space. Bitcoin's deflationary nature, coupled with its increasing role as a store of value, makes it an appealing asset for long-term investors. As institutional interest continues to rise and more individuals adopt Bitcoin, its value is likely to appreciate further, cementing its position as a cornerstone in the future of finance. For those looking to invest in cryptocurrency, Bitcoin remains a solid choice with the potential for both wealth preservation and significant returns. Not financial advice, and please do your own research. Thanks for watching.